Hello, I'm James Mills and you're watching CATEX TV, broadcasting live from Princeton, New Jersey. Time is currently 11:30 a.m. in New York, 4:30 p.m. in London and 12:30 p.m. in Hamilton, Bermuda. And now to the main news. The United States will pump $250 billion into its banks today, following similar measures in Europe. But data showed the threat of recession has not been banished, even if a financial sector meltdown has. Major European economies showed signs of flagging output and falling business confidence, but smaller countries also suffered acutely. Iceland sought to save its economy on a loan talks in Moscow, while the stock market plunged 76%. Under the Treasury plan, about half the total funds is likely to go to the top 9 US banks to get them lending to each other again. The Treasury will buy a stake in Bank of America, Wells Fargo, Citigroup, JP Morgan Chase, Goldman Sachs, Morgan Stanley, and Bank of New York Mellon Corp, said two sources speaking anonymously. Media reports said State Street Corp and Merrill Lynch would also receive a capital injection. The United Arab Emirates has more than doubled its emergency bank funding plan to 120 billion dirhams. It's approximately 32.67 billion US dollars. And that occurred today as Gulf Arab states stepped up moves to combat the global financial crisis. The UAE Prime Minister ordered the transfer of funds to the Finance Ministry to pump into its banking sector to protect against global volatility, state news agencies said, without giving details of the mechanism. The latest moves come after unprecedented week of emergency policy initiatives in the Gulf and around the world to revive a financial sector paralyzed by fear and threatening to push the global economy into a deep recession. And in insurance news, XL Capital warned of a 1.7 billion US dollar third quarter loss, though it is thought that this is not driven by the investment woes that have been hurting many other insurance companies. Instead, XL said it expected red ink was driven by other one-time items, including a 1.4 billion US dollar in charges from unwinding its relationship with bond insurer Syncora Holdings in August. Meanwhile, earnings excluded items were projected slightly above analysts' views. In addition to the 1.4 billion US dollar charge for the Syncora deal, XL said its latest quarter results were hurt by net losses of $222.8 million related to Hurricanes Gustav and Ike, a $41.7 million charge for streamlining and reducing future run rate operating expenses, and a $22.5 million charge for senior note redemptions. Excluding net realized gains and losses, XL expects to report earnings of 40 cents a share, down from $3.13 a year earlier. And continuing with XL Capital announced today that the chairman of its board of directors, Brian O'Hara, involuntarily sold approximately 80% of his XL common shares on October the 9th in order to meet a margin loan call. Mr. O'Hara commented, "I regret that last Thursday I was forced to sell approximately 80% of my XL shares. I had pledged those shares as collateral to secure a personal loan used to fund purchases of XL shares in order to avoid the expiration of certain options. The forced sale was due to the drop in XL's share price last week. The sale in no way reflects a lack of confidence in XL's current and future prospects." Talks between Boeing and its machinist union collapsed on Monday, raising the possibility that a 6-week strike at its commercial aircraft facilities could extend through the end of the month. In a statement from International Association of Machinists and Aerospace Workers, union leaders said Boeing hasn't budged on its issues surrounding job security. It has become apparent that the long-term strategy of the Boeing company is to eliminate these IAM positions and replace the union workers with outside suppliers, said IAM District 751 President Tom Robolski. Boeing's 27,000 machinists have been striking since September the 6th. No one from Boeing was available for comment. Two huge wildfires, driven by strong Santa Ana winds, burned into neighborhoods near Los Angeles on Monday, forcing frantic evacuations on smoke and traffic-choked highways, destroying homes and causing at least 2 deaths. Around sunset, residents were warned to stay on alert during the night, and winds more than 60 miles an hour were forecast. Governor Arnold Schwarzenegger declared a state of emergency in Los Angeles and Ventura counties. More than 1,000 firefighters and 9 water-dropping aircraft battled the 4,700-acre Merrick Fire at the northeast end of San Fernando Valley, and a 5,000-acre Cessanon Fire at the west end. Winds blew up to 45 miles an hour, with gusts reaching 70 miles an hour at midday. They are forecast to diminish in the evening before roaring over 60 miles an hour at 11 p.m. And continuing with wildfires, a second wildfire has broken out in the hills above Los Angeles' San Fernando Valley suburbs, prompting mandatory evacuations. Los Angeles County Fire Department Inspector Frank Garrido says the blaze is 5 acres but is growing quickly near Browns Canyon Road, a few miles north of Chatsworth. Garrido does not know what started the blaze shortly after 10:30 a.m. on Monday, a few miles west of the 3,700-acre bushfire that has been burning since early Sunday in the valley's northeast corner. Seismologists say a 5.1 magnitude earthquake has rattled the island of Evia north of Athens. And if we look at this map here, we'll see that is the orange square. Authorities on the island say there are no reports of injury or serious damage from the quake, which struck early Tuesday. The quake was felt in Greece's capital, Athens. The Geodynamic Institute of Athens says the undersea quake occurred at 5:06 a.m. Tuesday. That's local time. Its epicenter was 95 kilometers north of Athens, near the coast of northern Evia. The U.S. Geological Survey listed the magnitude of Tuesday's earthquake as 4.9. And now we'll go to a commercial break.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity. Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
From prehistoric time to today, man's progress has been marked by his ability to fashion tools and use them to his advantage. From early humans making tools from stone, man evolved and was soon trading with other men. Money evolved, and tools such as the abacus to handle complex money transactions were developed. By the end of the 19th century, machines such as the cash register began to appear. 100 years later, we have even better computer-driven machines which track stock, change prices, and automatically reorder. Meanwhile, the reinsurance industry has failed to embrace man's drive for progress. The reinsurance industry today would be as familiar to practitioners from the 1800s as it is to modern underwriters. An underwriter or broker from 1800 would settle nicely into today's business. That is, until now. For the reinsurance industry, pivot point changes everything. Soon it will be understood that the period before pivot point was as dark as the caveman period was before the abacus. Come and see for yourself if you don't believe. After a demonstration, you will understand what is possible.